What's up? My name is Jack Murphy, and for the past 2 years and 1 day, I've been investing in dividend stocks every single week, every single month, and I'm going to go over how well I've been doing with that and what are pretty realistic results you can expect in your first 2 years of investing. Before I go over my portfolio, I'm going to talk about why I started dividend investing in the first place, and that is simply because I want to retire as early as possible and I want to use dividends to supplement my retirement. Dividend income is the most passive form of income you can possibly get. You literally don't have to do anything except buy and own a stock that pays you dividends, and if you have enough of these stocks, you can make a lot of dividend income and not have to work for your money. So my idea behind this is I start now and invest over a long period of time consistently where my portfolio will be big enough to give me enough in dividends that it covers all my expenses. Then, say I'm in my 30s, late 30s, early 40s, my dividend income is so big that I don't have to work any job. Now, this doesn't mean I won't work, just means I don't have to do anything for money that I don't want to, like work a job. This is why I preach dividends so much, because if you could at least have some bills being paid off by dividends, that'd make your life a lot easier, a lot less stressful, and give you more free time for stuff you enjoy. So dividends overall are just a great asset for anybody, and I strongly recommend get involved in dividend investing. Now, I'm no professional, and you don't have to be professional to invest in dividends. It's pretty simple. You can just go the ETF route and just buy an ETF that's already diversified and pays dividends, and you're all set. Or you can go and pick individual stocks. I do both. I actually want to start by going over all the stocks and ETFs in my portfolio. I want to say how much of that stock do I own, what are the returns overall in percentage and dollars, when did I start my position in each of these stocks, and how much income do I get from them every single year. Now, if you don't already know, my portfolio is worth about $6,150 something dollars, and about $425 is in cash. So only about $5,700, $5,800 is actually in stocks, so I'm only getting paid dividends from that money that's in stocks. Just want to mention that if you haven't watched any of my other videos about my portfolio. In this portfolio, since March 8th of 2022, I've been investing $50 every single week, which I think is a pretty realistic goal for anyone who hasn't started investing yet. So if you've never invested before and you want to get into dividend investing, doing $50 a week is a pretty realistic goal, and these are pretty realistic numbers to see after your first 2 years of investing at $50 a week. So I just wanted to say I think this is a pretty attainable portfolio for anybody watching. With all that being said, let's get into each of the positions in my portfolio. So the first one is 3M, where I have about 1.84 shares. The total return is pretty bad. This is the worst position in my portfolio at a negative 31% return, which means I'm down about $78 and change, which is unfortunate, but the dividend payments do help supplement it a tiny bit, where I get $11.11 a year with my current position, and this is one of the positions I opened on March 8th of 2022. The next position I opened was Starbucks, where I have about 2.8 shares, and my overall return with my Starbucks position is about 14.8%, almost 15, and I'm up about $33 on my current position. My current position also generates me about $6.44 a year in dividends, which is okay, and I opened this shortly after I started the portfolio on March 14th of 2022. I also want to mention that just because I started this position on March 14th and any of these positions doesn't mean I bought the full amount of shares that I have now. I've been dollar cost averaging into all of these positions, which means I buy a little bit periodically and it builds up and accumulates over time. So none of these positions are like a one buy and then hold since whenever I opened it. The next position in my portfolio is Realty Income, where I have about 9.68 shares, almost 10 shares, one of the biggest positions in my portfolio, and I'm down about negative 10.65%, meaning I am down over $60, which sucks, but this is also one of the better dividend payers in my portfolio, and it is also monthly, and I also believe it will recover over time. So I've been dollar cost averaging into this position, even though it's already one of the biggest positions in my portfolio. It's also one of the oldest because I opened it April 5th, 2022 for the first time. And talking about the dividends, it generates me almost $30 a year in dividend income at my current holding. The next position in my portfolio is Main Street Capital, where I have just over 5 shares. I've made about 17% in capital gains so far, which is just over $33. This is also a monthly payer, and I get about $14.43 a year from them. And I opened this position for the first time May 31st, 2022. The next position in my portfolio is Target, where I have just over 2 shares, where I've made about 23.67% from my current position, which equals over $66 in unrealized capital gains so far, which is pretty good. They also make me about $9 a year in dividends, and my position started May 31st, 2022. The sixth stock in my portfolio is Lowe's, where I have 0.98 shares. Probably at some point I'm just going to round that up to 1, but for now it's still under 1 share. But I've had very good returns with Lowe's, where I have almost 28% returns, and that equals about $51.71, which is very good, especially for 1 share. The income I get from my almost Lowe's share is about $4.30, and I also opened this position on May 31st, 2022. The seventh stock in my portfolio is Altria Group, where I have a little over 7 shares. The return isn't great. It's a negative 1.72%, which isn't terrible, but not great because it is in the negative. That means I've lost about $5 in unrealized capital gains, nothing I can't come back from. It also helps that I get over $27 a year in dividends from my current position in Altria Group, so definitely covers the losses there. And I first opened this position July 6th, 2022. The eighth stock in my portfolio is JP Morgan, where I have about 1.14 shares. I have a very good return right now on my JP Morgan shares at almost 65%. So far, my JP Morgan stock has made me over $84. The income is a little less impressive at about $4.78, but I'm okay with that considering how much I like my JP Morgan stock, and I started this position on July 12th of 2022. The ninth stock, or I should say ETF in this portfolio, is probably my favorite position I have in the entire portfolio, and I'm sure it's a lot of your favorites too. SCHD, where I have 11 shares of in this portfolio. My total return on SCHD so far is about 7%, and since I have so much SCHD, that's over $56, so pretty good return there. And I also make almost $30 a year from my current position, so I've also made a lot off of the dividends as well. I started this position July 12th, 2022, and I like SCHD so much, I also got some in my Roth IRA, which is a whole different portfolio. Moving on is Intel, a stock I sold pretty recently. It isn't in my portfolio anymore, but it was for a while, and I did make a sizable return off of it, so it's worth talking about. So like I said, I have 0 shares, but I made over 56% on the shares I did have, which was about $140 of my original investment. And out of that $140, that 56% return made me just under $80. So that was a nice addition to the portfolio that I was able to redistribute that money elsewhere. And I closed the position on January 16th. Overall, I closed it because they cut their dividends and my position was up a good amount, so I just wanted to take profit and redistribute that money for dividends because that is the main focus of this portfolio. My 10th stock that I still have is Verizon, where I have 7.42 shares, and it is pretty close to break even at a negative 1.68% return, meaning I lost just under $5, which is okay because my Verizon shares right now make me about $19.73 a year in income, so that makes up for any of those losses. And I've had this position since July 27th of 2022. Then I have my Apple shares where I have 1.45 shares. Apple isn't really known for their dividends, but they do have a little dividend, so that is why it's in this portfolio. I've made about 18.19% off of my shares so far, so that's not too bad, equaling about $38 and change. I make about $1.40 from my Apple shares, which isn't anything to go crazy about, but it's something, and I started this position on October 4th of 2022. The 12th stock in my portfolio is Procter & Gamble, where I have about 1.15 shares. So far my position has made me over 11%, equaling about $19.40. They also make me about $4.33 in dividends, which is nice. And I started this position on January 29th, 2022, and that leads me to my next stock, Johnson & Johnson, where I have about 1.62 shares. I'm also almost break even on my Johnson & Johnson at a positive 1.64% return, equaling just over $4, so nothing to go crazy about. But I also make about $7.73 a year in dividends from Johnson & Johnson, so that's something. And I also added this to my portfolio, first on January 29th, 2022, and also the last stock I bought in 2022. That leads me to my 14th stock, Pepsi, that I added on February 1st, not January 1st. It took a whole month of 2023 to buy my first stock, which I have 1.66 shares of right now. Not doing too hot at a negative 1.59% return, $4.36. So that stinks, but I make about $8.02 a year from my position. So that covers the losses and gives it time to build back up. This brings me to my second ETF in the portfolio, JEPI. I have about 6 shares of JEPI, so it's a pretty big position in my portfolio. I'm up about 5.41% on my shares of JEPI, which is about $17.50. I get pretty good dividends from JEPI, where I get about $26.84 a year from my current position, and I started this position on February 27th of 2023. Then we have AbbVie, where I have just over 1 share. That 1 share has gone up over 30%, making me over $44 just from that 1 share, so that's pretty nice. I get about $6.40 from my current position a year in dividends, which is also nice, and I opened this position June 6th of 2023. My 17th position in the portfolio is UGI, where I have 9 shares exactly. It is also down a little bit at a negative 4.97%, which is a little over negative $11, which is unfortunate, but I've had a lot of time to accumulate a good number of shares, which means the income I get from the 9 shares I own is $13.50. And I opened this position May 16th of 2023. The most recent stock that I added was Texas Roadhouse, where I bought 2 shares, and they're up pretty significantly at over 44%, which means I've made over $85 just off of 2 shares of Texas Roadhouse. They make me about $9.04 a year, which is pretty good, and I bought my first share on October 27th of 2023. The last 2 positions in my portfolio are ETFs, and the first one is VIG. I have 1 share of VIG that's made me about 4.35%, equaling about $7.45 returns so far. This was the first thing I bought in 2024 on January 19th, and it makes me about $3.22 a year in dividends. And my last position is VYM, where I have 1 share and made about 5.69% returns so far, equaling about $6.32. This position was opened January 19th, 2024 as well, and I make about $3.52 from my positions. Those were the 20 positions that I have in my portfolio, plus the 1 I sold, and I think overall they're looking pretty good. But before I go over the overall performance of my portfolio, I want to talk about my dividends because that is included in the overall returns. The dividends are probably the most important part of a dividend portfolio, so I threw together a little spreadsheet to show you them. So how I formatted this is from March 8th, 2022 to March 8th, 2023 is year 1, and from March 8th, 2023 to March 8th, 2024 is year 2, because I didn't start on January 1st. So that's how I formatted it. Year 1, I made $67.80 of dividends, which is not bad for 1 year. And in my year 1 recap video, I predicted that I would 3x my income by the next time I make a video, which is now, which, as you can see, I didn't do. We just underperformed that, where I got $179, and 3xing at $67 would be close to $205. So we're still like over $25 away from 3xing it, but I think it's kind of close. And because we almost tripled it, I'm going to just say tripled it in the thumbnail because it looks a little better, but don't tell anyone. But this is not just a year-to-year recap. We're going over the first 2 years of the dividend portfolio. So that means we're adding up all the dividend payments together to equal a grand total of $243.27. I know that doesn't seem like a lot of money, but these things just take time. Compound interest will have its effect. I'll be able to start making bigger contributions in the future, and this portfolio will grow fast, the payments will grow fast, and my dividends are going to be very, very big in the future. But that is very exciting and gives me motivation to keep investing so I can get those dividend payments one day. And this brings me to the overall performance of the portfolio in the last 2 years. So let's go back to Charles Schwab and look at that. So looking at the Charles Schwab Portfolio Performance tab, you can see I have had a cumulative rate of return in the last 2 years of 17.75%, which is pretty good. But if you look at the annual rate, that is 8.49%. And then if we compare that to the other major indexes, I did underperform them. The S&P 500 and NASDAQ were over 12%, and the Dow Jones was almost 11%. So slightly underperformed them, which does stink. But this does mean that in the months that the S&P 500 tanks and the other major indexes tank, my portfolio will hold a little stronger and not do as much damage. Plus, I'll have the dividend payments that help supplement me from those market crashes so that I can reinvest and come out of stronger. So that is kind of the trade-off with these type of portfolios. So that's just how it is. And if we look at the other side of the screen, I blurred out the overall returns for the entire portfolio. So I can go over the capital gains first. The capital gains are the amount that all my stocks grew in value, not counting the dividends. This counts what I've sold and taken profit from, and also what I haven't sold and I'm still holding. So overall, the value of all the stocks that I've held have gone up about $452.88, which I think is pretty good. That is a $452 I did not have before. So if we count the $243 in dividend payments I got, my account has gained $696.86, which is just under $700. It is cool to see the $5,400-ish I invested gain me an additional $700. The foundation that I'm going to use to supplement my retirement, retire early, be more stress-free, is really putting itself together. And it's just awesome to see that really forming after just 2 years. So I'm going to keep building upon this portfolio. I'm going to keep doing my monthly updates where I talk about the dividend payments I get every month. And then hopefully you guys are here in 2025 for the year 3 update. But until then, check out my dividend playlist where I go over each month of dividend payments and talk about what stocks I'm buying and selling. And then here's some other videos that's YouTube suggests. Watch that also. And that's it. Thank you guys for watching. Hope to see you in 2025. Peace.